Just like I was saying about the CRT model, the first thing you are going to master here is the signal. Okay, the signal is more like the trigger for a trade. That this is the first thing that you must actually master. And what is that? Is the turtle soup. So first thing first, once you see these two candles set up, like a candle range followed by a turtle soup, that indicates that there's a trigger for a setup. And the second thing is the target. Now that target, I must define the target clearly also, right? So this particular one here indicates signal that, okay, there's going to be a certain trade to a direction. The target now is going to be your candle range low. So in this particular one, this low is our target. And over here, once you see this two candle formation, your target is the previous high of this candle range here, right? But that is not the only target you must also know, right? It is not all the time that the market actually wants to trade to those lows or those highs. We have I would say tiny scenarios or maybe other scenarios whereby the market will only stop at the 50% of the range. So that means of this particular range from the low to the high of this range, the market can just stop at the 50% of the range and continue buying from there. That means instead of selling all the way down, we might just see the market reversing from the 50%. But I only use that, or I expect that in only this scenario here, whereby the market has formed. You can see now there's internal range liquidity here, what we call the fair value gap. So that fair value gap is called internal range liquidity. And if the market trades to internal range liquidity and did not close below it, like in this case, normally what we always expect is that the market will continue buying to go to the previous high again. So in this kind of situation whereby we have a fair value gap, in between, which is the internal range liquidity, and you were expecting price to trade to your low, which is this point here, the 50% here can stand as what? As a target to reverse price to continue going higher. Do you understand? So just take note of that. Yes, the signal is this first two candle, and the target has been defined as well. Next is your entry. So I am going to define the entry based on this flow over here. So first thing you are going to look out for is the liquidity, the stop hunt and draw on liquidity. I mentioned that earlier. Just follow this workflow here. Okay, once you see the under liquidity, find the stop hunt. The stop hunt is that CS, total soup. Then the DOL, that's draw on liquidity, is your candle range high or candle range low, right? So on the second part is where you get to use your entry. So on the second part, we have market structure. So now this is where you are going to follow it up. If you are using daily, take notes. If you use daily to see your CRT, like the example I sent to the channel earlier, the example was on daily time frame. So if you use daily CRT, let me just go this way. Daily CRT, entry is 15 minutes. So same thing with H4 CRT, entry is 5 minutes time frame. Okay, so on the daily CRT here, you go to the 5 minutes, 15 minutes time frame to get your entry. And how do you frame the entry? So once there's a turtle soup above a certain high, candle range high, you want to go to the 15 minutes time frame and find a minor or a market structure shift. We call it a displacement also. Let me go to the chart and show you that example. So I'm looking at something like this. As the market is touching, we want to see a market structure shift. And what I'm teaching you right now is a strategy, what we call MSNR plus CRT, right? Malaysian Support and Resistance plus CRT. It's a very beautiful trading strategy, and I'll show you the power of it on the chart just now. So, you see, all of these things that you are looking at right now, they are POIs, point of interest. So it is not like the conventional POIs you are familiar with, other block, this one, this one. No, I can use that as well, no doubt. Trust me, I can use that as well. But for this my strategy, I'm going to be using this one now. Maybe in other videos or other times during our classes, I will show you how you can also use the normal SMC POIs, to choose or to take your trades. But for now, we're going to use MSNR POIs. So what do we have? We have the V-shaped key level. This one is called the V-shaped key level. This one is the A-shaped key level. This one is QML. The buys and the sell. Like this is the sell. Oh, this is the buy. Oh, QML. Then this one is RBS. That's resistance becomes support. and SBR, support becomes resistance. So all of these are going to be done on line chart. So you're going to be making use of the line chart. And if I want to, let me just give you this also. Add your candles to favorite, add your line to favorite, and last one is line with markers. Add it to favorite as well. So let's go back to the chart and let's analyze that example I showed earlier. Here we have the turtle soup, which is the TS, right? The one I showed earlier, right? So I think on that comparison, I need to also remind you of is I said a candle range also has what we call, it's not every time you'll be expecting that at a candle range there will be a turtle soup. Normally, what happens is just a breakout, normal continuation, right? You see now in a downtrend, just continue going bearish, bearish, bearish. And also bullish here means, that's just a normal thing. But the turtle soup is the one that actually indicates a setup. And that's even the reason why we are studying CRT in the first place. So over here, you can see the bearish candle here has been closing below. You can see this one closed below the previous one. This one even closed below the previous one, right? And but this current one, it failed to close below it, right? It failed to close below it. And that's why we say we have a turtle soup of this particular candle low. Okay. The next thing we look out for is to check on the left hand side and look for mitigation, right? You must look out for the left hand side and see if there's a POI that price had mitigated on the left hand side. And I have something like that on this side here. If I'm not mistaken, that seems to look like a V-shaped key level though, but let me see. On this side, okay, not price not touching it. So, but this is a POI here. That price had mitigated, right? So let's just go back to the daily and let's now see how the trade would have been taken. So this is our total soup. Where's our candle range high? This is the candlestick. This candle here. This is the eye of that candle. So I'm going to label it as the CRH. That's the candle range high, right? And that's our target. So on that target, how do we go? Let me do a replay and let's see what the market did in between till it got to that target. So I said go straight to the 15 minutes time frame, right? So on the 15 minutes time frame now, all you need to look out for is we are going to reassess and reanalyze. I'll just say readjust. Let me not use the word reanalyze. We're only going to readjust all these lines. So this is our total soup line. That's the previous candle low or the previous daily candle. You can apply what was it called, daily separator to see it better. Right, you can see this particular low is a low of a particular day, and this was a total soup below that low, right? That's a grab on liquidity. So now you're going to switch to the line chart, and we want to see our MSS. This I is our MSS, right? That I is our MSS. That's our structure shift. So once I see that I taking out MSS, okay, that's the I that confirms that, okay, now a trade is about to be taken. Now, remember what I showed you about the POI. I said we have all those types of POI, the V shape, the A shape, the QML type, the SBR and the like. So over here, we are going to use the V shape key level. This is the V shape here. That low, right? That's the V shape key level. So that low, see, after the displacement, that's where the confirmation thing comes in. It's not just by seeing CRT, right, on your whatever time frame. After seeing the CRT, then you go and check, is there a displacement on a lower time frame like this? And of course, use the time frame accordingly. If it's a 4-hour CRT, use the 5 minutes time frame. If it's a daily CRT, then use the 15 minutes time frame. Okay, so right here, we are going to take the entry from here. That will be the point of the entry from that V-shaped key level right here. Okay, now this is now where it gets even interesting. If you look at our other, like the flow at which I said we can apply this strategy, the second thing is order flow on lower time frame. So it's not just by saying you get our entry. Let's just say, for example, now you're using this QML. This is what we call a QML, right? Let's just say in this particular instance, you want to enter a sale from the QML here, right? You will not just take your sale from the QML. Now, yes, your TP will be at the target, the candle range low, right? But do you also know that the market also presents numerous opportunities in its way to that target? And that's what you now do on the lower time frame. Because that other flow you are seeing, that lower high you are seeing here, or higher high, higher low you are seeing there, is also an opportunity that can be traded. So that's the beauty of the CLT. It's once the direction has been locked, that you already know that price is going to the low or probably the high. You cannot trade the order flow on lower time frame to that target. That's the beauty. Now you can now decide to go ahead and use maybe Q zones, that's entering during the London or New York Q zone, time frame section rather, to confirm. That's on you. Or you want to use entry confirmation. For example, you want to say if there's no liquidity, I will not enter. You understand? Those are your order. Those are just confluences, right? So, but this is just the right flow. So right here, once we get the entry here, our target is the candle range high, right? Of course, I can target even higher, but let's not go beyond that for today. I have my reason. So I'm targeting the candle range high, okay? So, and I just mentioned that you can also catch other opportunities. So let's take a look at this one here. Look at this eye. Look at this eye here. So it's like market is just doing, shifting structure. Look at this. It's already shifting structure, breaking this tiny eye. Okay, and so now this time around, price is coming back. Where do you think it's coming to? Where would you think as a POY? Like, let's just assume that the price has done higher high, it's coming down. We have the V-shaped key level here again, and we also have the QML. Look at this. That's the QML, right? This is what we call QML. This, I think I made the shape here. This kind of pattern. So this line, this is our QML line that you can also use for entry. So if I extend this line right out here, you would likely see the market reacting at that point. But this is not even the beauty again. Let's now start following the structure carefully. So over here, the market, I think market market is breaking this high again. So the next thing you're thinking of is, where will I use as my entry? So what are the options? We have the QML, we have the SBR. Okay, SBR means support become resistance, like something like this. And we have the RBS. So SBR is this one, like this particular low that was a support zone. When it gets broken, the market can make a push back into it and sell from there, right? Same thing with the RBS. We have this level as RBS also. The market can also make a push into it and continue. So on this current chart here, I have that exact example over here. And this is it here. Look at this eye. So that's my this one is my RBS, right? That eye that was broken. You see the price was breaking through it. So it's like having a break and a test bar. So that will be on that point of entry. Now, all the entries you are going to be taking here, your target must be towards where? Your target must be towards the candle range high. So where's the candle range high? Over there. So this is your target here. The candle range high is your target. Another thing again happened. The market also breaks the previous high here. So like I said, more opportunities, right? This is under RBS. See, under resistance becomes support, right? This is a resistance that can technically become support. So we are going to place under entry at that point. Or let's say we're going to have under entry over there. And this is the beauty of the CRT that you are just about to, you're learning right here. And now, so this is the beauty it has. Your target is still where the candle range high. As the market broke this previous high again, okay. Now that's just the final target. So as the market even broke that high again, you will just get more entries as we progress towards the main draw on liquidity, which is this main high right here. Do you understand? So this is how the CRT can be applied as a model and as a strategy. So this is how I apply it. If you go ahead to my charts, my candlestick chart, you'll see this is the this is one of the QML, right? The reclaim level. This is the M level. Hey, the reason why I use the M level here is because there's liquidity. Let me now add the confluences to this trade also. We have liquidity here. In fact, most of the entries add liquidity. We add liquidity here as well. Okay, this other one to add liquidity, it was even like more like equal liquidity taken out. Right? This one also add liquidity, engineered liquidity, right? Engineered liquidity kind of vibe. So, and more like that. So these are the confluences that you can also even build around yours. And that's not even the only example I want us to look at. There's another example over here I want us to look at, so that we can just see more, places that the CRT has worked, and how we can apply this in real time to make good something for ourselves. You get. So look at this chart over here too. most, you see, don't just treat this as a pattern. Make sure you're also trying to align it with something that makes sense, because that's the only way it's going to pay you, right? Look at this particular candle here. You see now, price made a push, was making a retracement back to the demand. This candle here is what we call indecision candle, right? And that's a demand zone, because that was what created this long push. So this was a retracement back to that point. And what did you see? I can see a CRT low taking, right? See now, the candle range low here was taken. So that means price will be trading to the candle range high. So let's go ahead and let's see how that would have played out on this one. This is the turtle soup here, right? So let me just go straight to the lower time frame to save time. Let me just go straight to the lower time frame. Now this is on daily, so we're going to still use our 15 minutes time frame, right? So we're still going to maintain the 15 minutes time frame for this one. So how would you place the entry? Where's the turtle soup? This is our turtle soup right here at the low. That's what we're trying to check now. Hold on. Yes, this is the candle. This is the low, the previous day low. And this is when the market was taking it out as a raid on liquidity. So the question is, how would you enter? So according to what I said, you go to the line chart. So, and let's see how this knowledge is consistent, right? Consistency matters, right, in application. So over here, what do you see? Now we can see the market having, this is a recent low, right? I think I can take this high as a high. Yes, that's a lower high. That's a lower high. In fact, when you're having a displacement, which is a structure shift, the more eyes that are displaced, the better you can even strongly confirm that the reversal is going to be sure, right? So right here, this is the previous eye. This is the eye I even noted myself, right? So this is the time market actually went to go and break that eye. So once market starts making a pullback, what are the options? Do you get what are the options I have for my POI? I would say, probably I would say I have QML, this previously, this one, but that's not true, because market had already mitigated a previous key level here. So this particular low that you're looking at here is a V-shaped key level, right? The low that formed the eye. So that point is the last point for the POI, and that would have been another entry point. And that's on the 5 minutes chart, right? So 15 minutes time frame. So look at the key level here being used as an entry. Remember, the TP is all where all to your candle range high, all to your candle range high. Okay, so let me show you something else. So I applied something else on this one on 4 hours. So I'll just quickly show you this on 4 hours time frame. So I applied something else on the 4 hours time frame. You see, when market had a push up like this, like an impulse to the upside like this, and it start making that retracement, right? So there's a level on this on the left hand side. We call it OCL. This is it here, this level here. This is it exactly. Right. So that particular level now, I have not explained it, so you might not understand. But let's just see that okay, there's a level here, bar. Oh yeah, no wala. But there was also CLT, and that's the one I want us to now look at. This is the 4 hours candle range low taking bar. So, and normally this is aligning with structure. That's the reason why the target was still the previous high. So look at this. So just take a look at it. This is a 4 hours candle range low taking. So normally price is going to trade to the candle range high, which is this particular high here. So let's put this low as TS, our turtle soup. Now, according to what I explained, where are you going to next? We are going to the 4 hours. So let me just make the candle bars. Let me make them very small, and we're going to go to 5 minutes straight up. So on the 5 minutes time frame, where we have that candle, that turtle soup of the 4 hours. Where is the turtle soup of the 4 hours? Okay, I think this is it. This is the turtle soup of the 4 hours. So this is it here. This is the turtle soup. So what would you look out for? We are going to look out for a shift in structure. So this is the turtle soup. Like this was a move that went to go and take out the previous candle low. We are going to look out for our displacement, right? The MSS. So this is the eye taking out, under eye taking out. Like numerous eyes were taken out. That's a good thing. And this eye also was taken out. So like I told you, once you just have those eyes taken out, that's a confirmation. The next thing is now the entry. So I guess this entry was taken on 15 minutes. I'm very certain this one was a 15 minutes entry. I'm certain, yeah, this is it. But let me use 5 minutes for it. Let's not use 15 minutes for it. So on the 5 minutes time frame, what would have been the entry here? So let me show you the entry on the 5 minutes. So This is our move all the way from this low to this high. Where will I have chosen as my entry point? So right here, I'll look out for the level that has not been mitigated. So look at the key levels. Look at the key levels. Hold on. Let's just take it this way. This is a high. That's this high here has been taking like having high, low, high, low, high, low. So when you have something like this, take notes. When you have something like this, is that network? Okay, I think I was explaining something here. So if you have something like this line that you're looking at right here, this particular line that you're looking at, and the market had not mitigated that high, that particular, that's what we call the RBS, right? Resistance becomes support. So let's check on the candlestick chart, right? And on the candlestick chart here, it appears that the level has been mitigated. Then definitely what we are using is this level, the low here. The low here is what we're going to be using. So that's our entry. That low is going to be our entry. So that point is our entry. And I'm going to be placing my stop loss below here. Right? I'm placing my stop loss below here. Now, where's my TP? My TP is definitely the 4 hours candle range high, right? So this is the 4 hours candle range high. And of course, I can actually target the main high itself. So that's the first entry. But that's not the only entry you can get, right? Let's just follow the market all the way. Let's just follow the 5 minutes charts this time around. So here we have a high. We have the low here. I'm sure there has been a mitigation here. So recently we have this new high, and this is going to be the new low. Price had just mitigated that also. And what do we have again? Do we have a mitigation of this level? So for this particular entry, it was a QML entry. This particular low, this particular point is the one the market came to reclaim. So let me just not complicate. Can you see this particular one here? That's just imagine that. So it's a very beautiful strategy, very, very beautiful one. As long as you just know how to play it. Can you see the levels I marked? They are the ones that price came for and was just buying away from there. And that's how you apply the CRT model to form a setup. Okay. I wish to show more examples, but because of time, I'll be stopping here now. I hope this one gives you a very good insight into what the CRT looks like and how it can be used to get high risk to reward trades, like very, very high risk to rewarding trades. So I think this was the one we're trying to check. This is it. This would have been the entry from that line, and this would have been the stop loss below your candle wick here. And that would have been a beautiful one. Even if you're taking to your 4 hours candle range high, that's still what's the risk to reward there? That's beautiful 1:8. It's not bad. So if you're taking it now to the main eye, that's a very, very good one too. And that's how you trade with the CLT, right? See the other flow. Very, very good opportunity to catch many, many trades towards